So once again, very good evening, everyone, and welcome back to the session. So we are in the last, almost last phase of our crash course. Like it's the 4th day, and we have already covered our major topics with regarding the 50 marks areas, as well as also we have covered the area relating to critical appraisal. And in our today's session, we will be focusing much more on the areas of reporting. So basically, when it comes to the reportings area, we will be getting a variety of questions. We will be getting a lot variety of questions from the area of reporting. Especially when it comes to your 25 mark question, definitely we know that one of our question will be based on reporting itself. So we will be looking into the different types of reportings question today. So as we mentioned, we will be having multiple type of reporting questions, which includes matters to be considered further actions, then matters to be considered in discussion with the management, then in relation to matters to be considered and audit evidence, matters to be considered further actions, and matters to be considered before accepting engagement and before accepting terms of engagement. So these are the different types of reportings question. So first of all, we will be starting with matters and further actions. Okay, we will be starting with matters and further actions. So one of the best question that is there in our revision kit relating to the matters and further action is a question relating to Rocket Company, the one we did yesterday. So we'll just quickly brush through the scenario and we will have a discussion on the requirement as well. So in the scenario, they have told us that we are the auditor responsible for the audit of T&Co. Responsible for the audit of Rocket Company. And in relation to the Rocket Company, they have provided us a scenario. So please go through this scenario very quickly. Everyone, please do read the scenario. Okay. So the company is manufacturing machinery for the use in aircraft, defense, and marine sector. Audit for the year ended 30th April 2017 is almost complete. And revenue and the profit before tax figures recognized in the draft financial statements are 1,437 million and 139 million respectively. The audit procedures identified 2 sales transactions in the final quarter of the year that relate to different customers, but where the goods were delivered to the same location. Further investigation revealed that the goods were delivered to third party who agreed to store them until the customer were ready to receive the goods. The goods have not yet been delivered to the customers because they are both building new facilities. Neither is sufficiently progressed to receive the new machinery. The contract terms explicitly state that Rocket Company is obliged to deliver goods to the customers for final inspection and acceptance, and client has not agreed any consequent amendments to these terms. The sales invoice were raised and the revenue recognized upon dispatch of the goods to the storage facility. During the discussion with the audit team, finance director stated that company had fulfilled its contractual obligations to provide goods by a specified date. The revenue attributable to 2 sales transactions total 17 million. So what did they told us regarding the company's contract? They have clearly mentioned that the company have got a contract. Well, they have got 2 contracts in relation to 2 different customers. They have agreed to the customers that they will deliver the products to the customer's warehouse. And the customer will also have to finally inspect the product. Then only they will consider it as a completed contract. And right after that, they have clearly mentioned that the company have not yet satisfied the performance obligation because they have delivered the product to third-party warehouse and goods are yet to be inspected by the customers. So it is very clear that the company have not yet satisfied the performance obligation. And the finance director, on the other hand, he is stating that they have already satisfied the contractual obligations and due to which they have recognized the revenue of 17 million within their revenue. Okay, so this is what it's mentioned in the scenario. So which is the applicable accounting standard here, which went wrong? It's the accounting IFRS 15 revenue, right? It's IFRS 15 revenue. They have clearly mentioned that it's IFRS 15 revenue. And in accordance with IFRS 15 revenue, when do we need to recognize a revenue in relation to
performance obligation
only when the performance obligation in relation to a contract is being satisfied, right? So have they actually satisfied the performance obligation in relation to the contract?
No.
However, they have recognized the amount as revenue. So what will be the impact that will be created over the company's financial statements?
Overstated revenue.
And deferred income will be understated. Exactly. That is what happened. So, first of all, the examiner have asked us to comment upon the matters described above, and they are asking us to provide further action necessary before the audit report can be signed. So, first of all, we need to mention about the matters that is mentioned in the scenario. So, when the examiner requests us to provide the matters, the first thing that you need to clearly mention is the materiality. The materiality of the issue mentioned there. And second, you have to clearly specify the accounting treatment. So whatever is being required as the accounting treatment should be provided properly. Then you have to provide what went wrong. However, same as how we used to mention it in audit risk, you should clearly specify the scenario with that of the accounting treatment. So whatever went wrong in the scenario should be explained on behalf of the accounting treatment. And finally, you should also show the impact on the company's financial statements. This is what you need to provide as part of the matters. So please do one thing, calculate the materiality of this item. So while doing the questions for reporting, you can always consider the lower limit. Well, they have given us the company's revenue as well as the profit figure. So you consider 16 million, sorry, it was 17 million, right? So profits 17 million. So 17 million divided by 170, it's 139. 139 into 100. How many percentage?
12.2%.
12.2%. And what about the company's revenue on the base of revenue? How much does it constitute?
1.18.
1.18%. So is it material?
Yes.
Yes, because it is more than 5% of the profit and 1% of a 0.5% of the revenue. Therefore, it has to be treated as material. So you can mention about the materiality first. Then after that, you need to clearly specify about the accounting treatment. Then you need to mention about what went wrong. And finally, you need to show the impact on financial statement. So you can mention it like this. The amount of revenue recognized in relation to the company's contract relating to two different customers represents 1.18% of the profit and 12.2% of the profit of Rocket Company. Therefore, it is a material mistake. As per IFRS 15 revenue from contracts with customers, revenue should be recognized only when performance obligation in relation to the contract are being satisfied, till the date on which the revenue should be treated as a deferred income and should be recognized as a liability. However, the company have two unsatisfied performance obligation in relation to two different customers, whereby the company have agreed to the customer that they will deliver the product to the customer warehouse and the contract will be treated as completed only when the goods are finally being inspected by the customers. Since both of the performance obligations are not yet satisfied, the revenue cannot be treated as the revenue of 17 million cannot be recognized within the company's revenue and should only be recognized as part of the deferred income. Since they have already included within the company's revenue is overstated by 17 million and the company's deferred income is understated by the same amount. So this is what you need to explain with regarding the matters. Clear?
Yes, sir.
Okay. And after writing the matters part, they have asked you to provide the further actions that need to be performed by the auditor before the audit report can be signed. So when they ask for further action, okay, when they ask for further action, what you need to consider is that, first of all, the first action that have to be taken by the auditor is to communicate the matter with the client's management. Okay, so you need to communicate to client company's management. However, while writing communication part, you should not merely write that the auditor should communicate to management. Instead, you should need to provide what you need to communicate to management. So if you want to communicate to management to correct the mistake in the financial statements, then you should also specify the corrective treatment that have to be taken. Then second, if the management is unwilling to correct, if the client is unwilling to correct, then in that case, auditor should make the communication to those charged with governance. However, if those charged with governance is also not willing to correct the mistake, auditor should communicate to those charged with governance about the impact that will be created over the auditor's report. In case if they are still willing to continue without amending the financial statements, auditor should obtain written representation from those charged with governance in order to confirm that they are willing to continue without amending the financial statements. And finally, the auditor should also reflect it in auditor's report. Since reflect in the auditor's report. And since they have asked in this question to take necessary action before auditor's report is signed, it is not necessary to mention about the auditor's report here. Instead, you only want to mention till where you want to obtain written representation. So specifically on the basis of this answer, you will be providing further action like this. The auditor should communicate about the misstatement in relation to revenue recognition to the client's management and should request them to correct the misstatement in the financial statement by removing the amount of 17 million from the company's revenue and including the same amount as part of the company's deferred income. And in case if the management is unwilling to correct the misstatement, then the auditor should make the same request to those charged with governance to correct the mistake in relation to the company's revenue. But if they are still unwilling to correct the mistake, then the auditor should inform them about the impact that will be created over the auditor's report, or the auditor should mention them about the modification that will be created over the auditor's report. If they are willing to continue without amending the financial statement, in that case, auditor should obtain a written representation from them, stating their intention to continue without amending the financial statements. This is what you need to provide as a further action. So when you write the further action, you should clearly specify about what you have to communicate to the client's management. Then you have to communicate to those charged with governance. Then what will be the impact created over the auditor's report? Then you need to mention about obtaining written representation. And finally, you need to reflect it in the auditor's report. This is what you need to provide as part of the further action. Is that clear, everyone?
Yes, sir.
Okay. Then again, they have asked you to show the impact over the auditor's report if adjustments are not made in the financial statements. So it's an additional question. They have asked you to show the impact over auditor's report. So as you can see over here, there's a misstatement in the financial statements relating to 17 million. And you've already identified that mistake is a material mistake as it constitutes 1.18% of the profit and 12.2% of the profit and 1.1% of the revenue. And do we need to consider it as pervasive?
No.
Why?
Profits are not being treated to losses.
Yes, I have already told you that in case if you want to identify whether a mistake is pervasive or not, what you can do, you can compare the misstatement with that of the company's profit. And if the misstatement is adjusted in the financial statement, and if the profit is restated into losses, then it have to be treated as pervasive. Since the company is already having a profit of 139 million, and they have got only misstatement relating to 17 million, even if this mistake is adjusted within the company's financials, the profit will not be restated into losses. So it's a mistake which is material, but not pervasive. So which opinion have to be expressed in the company's financial statements? What sort of opinion have to be expressed?
Qualified.
Yes, the auditor should provide with a qualified opinion. Clear, everyone? Okay. So if the examiner is asking us to provide the impact on auditor's report, so they have asked us to provide the impact on auditor's report. then the first thing that you need to mention is that you need to mention whether that particular mistake is material. Then you need to mention whether that mistake is pervasive. Then you need to provide whatever be the opinion that have to be clearly mentioned. And finally, you need to provide the basis of opinion also. Okay. So if you express all the 4 of this, then you will be getting 5 marks. So you'll be expressing your answer like this. If the management is unwilling to correct the misstatement in relation to the company's revenue, then the amount of 17 million will be considered as material, as it constitutes that percentage of the profit and revenue. And even though this amount of misstatement is considered as material, still it will not be treated as pervasive, as the reported profit of dash amount is not restated into losses even after the misstatements are adjusted. Therefore, the auditor needs to provide a qualified opinion stating that except for the mistakes identified in relation to the revenue, rest of the financial statement shows a true and fair view. Following the opinion paragraph, auditor should also provide basis of qualified opinion to give the reasons for providing qualified opinion and to mention about the quantification of the misstatement. This is what you need to provide as the impact on auditor's report. Is that clear, everyone?
Yes, sir.
Okay. So this is how you will be expressing answer for a question on matters to be considered and further actions. So whenever you get a question on matters to be considered and further action, first of all, what do you need to mention? You need to mention about the materiality, then clearly specify the accounting treatment. Then what will go wrong? Whenever you write what will go wrong, you need to mix up the scenario with that of the accounting treatment. Then finally, you need to show the impact on the company's financial statements. Then when it comes to the further action, first of all, you need to communicate the matter to the client's management, then to clients those charged with governance, and then you have to show the impact over the company's auditor's report. Then you must consider obtaining written representation from those charged with governance if they are unwilling to correct the misstatement. Finally, they need to reflect it over the company's auditor's report. Then, when you write the impact over the auditor's report, first of all, you need to show whether a matter is material. Then you need to consider whether it is pervasive. Then you have to provide your opinion. And finally, you should also provide the basis of opinion. Is that clear, Paka?
Yes, sir.
Okay. Then, same pattern. In the same pattern, we will be getting one another scenario as well. Just a moment. So basically, in the same pattern, we will be getting one another question with a slight difference. Okay. Same. The question will be almost like this. We have already done this question in our class. So the examiner might be asking you to explain the matters which the auditor should, explain the matters which should be discussed with the management in relation to each of the uncorrected misstatements. Assuming that the management does not correct the misstatement identified, evaluate the effect of each on the auditor's report. So they have given us some scenarios, maybe 2 scenarios over here. And on the basis of these 2 scenarios, they have asked us about the matters which should be discussed with the management in relation to the uncorrected mistakes. Matters which should be discussed with the management. In the prior question, it was the matters to be considered and further actions. So when you get a question on matters to be discussed with the management, there is only a slight difference in your answer, that you need to provide matters part, and instead of providing the whole further action session, you only want to mention about what you need to communicate with the client's management. So whatever things that to be communicated with the client's management shall be provided. Instead of that, instead of providing the whole things out there in the further action. So that's the only difference between matters to be considered and further action. Suppose you consider that if you were getting a question with the same scenario, like one we did in the rocket company, and if the requirement was to write matters to be considered in discussion with the management. So first of all, we will consider the matters part. After that, we will include a statement on communication with client's management. We will mention that the auditor should communicate with the client's management about the misstatement in relation to the revenue of 17 million. Auditor should request them to correct the mistake in the financial statement by including amount of 17 million within the company's deferred income, and the same amount should be removed from the revenue. Okay, this is what have to be mentioned there. Suppose if it is mentioned in the scenario that the auditor have recognized a provision in relation to the bad and doubtful debts, and the amount of provision is not adequate. So that is what we have figured out from the scenario. So in that case, we can just do one thing. The statement should be like this. Auditor should communicate with management and should discuss on the rationale on the basis of which they have reduced the amount of provision. And since the amount of provision is not considered to be reasonable, auditor should request them to reverse the amount of provision by including additional provision for the possible bad and doubtful debts. And the same amount have to be included as part of the company's expense for the current year. This is what you need to provide there. So if it is a matters to be considered in discussion with the management part, you only want to specify about matters and communication with management. Clear?
Yes, sir.
Okay. Again, one more thing that have to be considered. See, here they have asked us the impact over auditor's opinion, right? So in the other question, like over here in the prior question, they have asked us for impact over auditor's report. And in this question, it's impact over audit opinion. So both are different. So if you're getting a question on to write about the impact over the auditor's opinion, you only want to include till here. You include by providing the opinion and you conclude by that. However, if you're getting a question on writing the impact on the auditor's report, then you must also specify about the basis of opinion. And sometimes if you need to provide emphasis of matter paragraph, key audit matter paragraph, material uncertainty relating to going concern paragraph or any other paragraph, then that should also be mentioned there. So if you're getting a question for writing the impact over auditor's opinion, then just consider whether it is material, then pervasive, and state the opinion. And if it is about the auditor's report, then include basis of opinion and other elements. Clear, everyone?
Yes, sir.
Okay, fine. Again, moving forward, see, one more additional important thing that have to be considered. Here, you have got two scenarios, whereby the first one is talking about a related party transaction, and the second one is talking about mistakes in relation to a provision. So there are two different scenarios, and they have given you the requirement that assuming the management does not adjust the misstatement identified, evaluate the effect of each on auditor's opinion. So you have to mention about each of the misstatement which created impact over auditor's opinion. So literally, which means that for the case number one, like for the case relating to the company's related party transaction, you need to give a heading related party transaction. Then you need to provide the materiality, accounting treatment, what went wrong, and impact on FS of that item. Then you have to discuss about the communication that need to be made with the management. And after that, you need to show the materiality, pervasiveness, and impact over the auditor's opinion. Again, you need to take the second scenario relating to provision. For the same, you need to provide matters, then discussion with management, and impact on auditor's opinion. This is how you need to provide answers for this sort of question, whereby they will be asking you for effect on each on the audit opinion, effect of each on the audit opinion. Then we have got another question called Boston. So if you look at the question Boston, in the requirement number one, the requirement number one is similar here. They have asked us to explain the matters which should be discussed with the management in relation to uncorrected mistakes, including the assessment of their impact on financial statements. But the second question is a bit different. Assuming that the management does not adjust any of the misstatement, discuss the effect on audit opinion and audit report. So here they are asking you to consider that the management is not adjusting any misstatement mentioned in the scenario. So these are the total list of misstatement. They are asking you what will be the impact over the audit opinion and report. So in that case, what you need to do? You need to take the cumulative effect of the misstatement. You have to take the total of the misstatement and need to consider whether that is material, pervasive, and you need to express opinion and basis of opinion on that. So first of all, in relation to each of the matters, in relation to impairment, you will provide the matters and discussion with the management part. Towards the borrowing cost also, you will provide matters and discussion with the management part. Same you will provide for investment as well. And after that, give a separate heading called audit report. And within the audit report, you will calculate the cumulative misstatement, which means you will take the aggregate of the whole misstatement. And on the basis of that aggregate misstatement, you will consider whether that mistake is material. Then you need to consider whether it is pervasive. And finally, you need to provide the opinion and basis of opinion paragraph. Clear? Is that clear, everyone? അതായത് നമ്മളോട് ഇവിടെ ചോദിച്ചേക്കുന്ന എന്താ? നമ്മളോട് ഇവിടെ ചോദിച്ചേക്കുന്ന മാനേജ്മെന്റ് ഈ മിസ്റ്റേക്ക് ഒന്നും കറക്റ്റ് ചെയ്തിട്ടില്ലെങ്കിൽ ഓഡിറ്റ് ഒപ്പീനിയൻ റിപ്പോർട്ടിന്റെ മേലെ വരുന്ന ഇമ്പാക്ട് എന്താന്ന് അല്ലേ? അപ്പൊ നമ്മൾ എന്താ ചെയ്യേണ്ടതെന്ന് ചോദിച്ചാൽ ഇത്രയേ ഉള്ളൂ. മാനേജ്മെന്റ് ഒന്നും കറക്റ്റ് ചെയ്തിട്ടില്ലെങ്കിൽ എന്ന് പറഞ്ഞു കഴിഞ്ഞാൽ എന്ത് ചെയ്യുക? നമ്മൾ ഈ മിസ്റ്റേക്കിന്റെ ടോട്ടൽ എടുക്കണം. ആ ടോട്ടൽ മെറ്റീരിയൽ ആണെന്ന് നോക്കണം, പെർവേസീവ് ആണെന്ന് നോക്കണം, എന്നിട്ട് എന്ത് ഒപ്പീനിയൻ കൊടുക്കണം എന്ന് പറയണം. മനസ്സിലായോ? മറ്റേതായിരുന്നപ്പോൾ ഓരോ എമൗണ്ടും നമ്മൾ മെറ്റീരിയൽ ആണെന്ന് നോക്കും, പെർവേസീവ് ആണെന്ന് നോക്കും. ഇവിടെ ടോട്ടൽ എമൗണ്ട് ആണ് മെറ്റീരിയൽ ആണ് പെർവേസീവ് ആണെന്ന് നോക്കേണ്ടത്. Okay. And one more important thing that you need to consider, that you are getting debit and credit figures, right? So when you take the cumulative amount of misstatement, how will you be taking the total? What will be the total amount of misstatement here? What will be the total of the mistake here?
3,81,500.
3,81,500. Why? Net off, because debit balance is a positive balance and credit balance is a negative balance, right? So when you take the cumulative amount of the misstatement, that will be netted off into 3,81,500. And please don't take it as 6,18,500. Okay. Clear, Ayo?
Yes, sir.
Okay, fine. So this is what you need to consider with regarding matters to be considered and discussion with the management. Okay. So we will take a question which we have already done so that we can quickly discuss through that question. So we have done a question called Cooper. Okay. So please go through this scenario very quickly. Cooper. Everyone, okay? Everyone, please do go through that scenario. Cooper. For the timing, just consider it as a matters to be considered question. Just a matters to be considered question. Done? Okay. So you are the manager in Ross & Company, responsible for the audit of Cooper Company. You are reviewing the audit working papers relating to the financial year ended 31st Jan 2014. Cooper Company is a manufacturer of chemicals used in agricultural industry. The draft financial statements recognize profit for the year to 31st Jan 2014 of 15 million and total asset of 240 million. Audit senior Max Turner has brought several matters to your attention. Cooper Company's factories are recognized within property, plant and equipment at a carrying value of 60 million. Half of the factories produce chemical which is used in farm animal feed. Recently, government has introduced regulations stipulating that the chemical is phased out over next 3 years. Sales of the chemical are still buoyant, however, are projected to account for 45% of the Cooper Company's revenue for the year ending 31st Jan 2015. Cooper Company has started to research a replacement chemical which is allowed under the new regulation and has spent 1 million on feasibility study into the development of this new chemical. So which all are the standards they have specified here?
IA 16.
IA 16 and
Yes,
AS
36.
38.
IAS 38. Is that actually IAS 16? Yeah, IAS 36, right? So
Yes.
it's IAS 36. What's the actual issue here? So Cooper Company was manufacturing its chemical by using the proper plant and equipment, but unfortunately, government have introduced a new regulation due to which they won't be able to manufacture that chemical anymore. So they will not be able to continue with their production process, and they have mentioned that since they are not able to use the existing machineries and things, they have spent 1 million on feasibility study to understand about the development of this new chemical. So as per IAS 36, what do we need to do here? What do we need to do here?
Impairment.
Yes, we should recognize impairment in relation to the 30 million, right? Because half of the factory will be phasing out. So there can be chances that the 30 million valued asset might be impaired, since they will not be able to sell the same product anymore in the market. So as per IAS 36 impairment of asset, how do you need to account in? We need to consider whether the carrying value of the asset is higher than that of the recoverable amount.
Recoverable amount.
And recoverable amount should be taken at the lower of fair value less cost to sell or
Value.
value in use. Okay. So on the basis of it, what will go wrong here? What can go wrong here? There can be chances that the company might not have performed impairment review, in relation to the company's asset. And in that case, what will happen? The value of the company's assets will be overstated and related expenses will be understated, right? Yeah. And what about the replacement chemical? How do we need to treat it as per IAS 38?
Research expense.
Yes, because it is clearly specified that the company has spent 1 million literally for feasibility study.
Feasibility study.
Since the company has spent it specifically for this feasibility study, it have to be purely be treated as part of company's research expenses and should be expensed in the company's P&L. And what will be the possibility of risk there?
They might have capitalized as a
There can be chances that the company might have treated it as part of their company's
development
expenditure, leading to overstated intangible assets and understated
research expense.
research expenses. Okay, this is what we need to explain there. So, if it was just a question on matters to be considered, we only need to provide this much. And well, we know that definitely we'll be getting some more add-on to matters to be considered part. So consider it's a matters to be considered and discussion with the management question. So what we need to do in that case, if it's a matters to be considered discussion with management?
Communicate with management.
Yeah, we can discuss with the management whether they have carried out impairment review in relation to the assets. And in case if the management have not yet done that, the auditor should request them to perform the impairment review and recognize the expenses in relation to impairment and to reduce the same value from the value of non-current asset. In addition to which, the auditor should also request the management to include the amount of 1 million spent on feasibility study within the company's P&L rather than including it as part of the company's development expenditures. Okay. And if it was a question on further action, then what we need to do? We need to make add-ons to that part, right? In case if the management is unwilling to correct the mistakes and to perform the impairment review, auditor should make the same request to companies. Those charged with governance, and if those charged with governance is also unwilling, then the auditor should request them to provide. Then the auditor should discuss them about the impact that will be created over the company's auditor's report. And still, if they wish to continue without amending the financial statements, auditor should request them to provide written representation stating their intention to continue without amending the financial statements. Okay, finally, the auditor should also reflect it in the auditor's report. Yeah, that will be what mentioned as part of the matters to be considered further actions question. Again, in this scenario, consider it's a matters to be considered and a question on further procedure. Okay. You might be getting a question on matters to be considered further procedure. So if you get a question to write on matters to be considered and further procedure, in that case, you need to write the matters part. And after that, you need to provide the audit procedures. Clear? Okay.
Yes, sir.
If the examiner is asking to write the matters to be considered and further procedure, then you need to identify the matters and then further procedures. Okay, which means the audit procedures need to be performed on IAS 36 impairment of assets and IAS 38 intangible assets. Okay, so well, we have already studied the audit procedures which need to be performed by the auditor. So how can we use these points? What we can discuss with the management in this case?
About the impairment.
About the impairment review, right? Discuss with the management about the impairment review in order to confirm whether the company have performed impairment review for the property, plant and equipment. Then about what you can obtain written representation from them.
If they have performed the impairment review,
Okay.
the reasonableness choice.
Okay, fine. Yeah. Then from whom you can obtain the external confirmation in this case?
Government if they have placed it out.
Okay, fine. In case if you want, you can obtain it from a company's lawyer or from the government authority, especially from the lawyer. Obtain external confirmation from the company lawyer in order to confirm whether the company might need to stop selling the products in relation to the whatever being mentioned in the scenario that can be specified. Then ആരൊക്കെ തമ്മിലുള്ള correspondence നമുക്ക് നോക്കാൻ പറ്റുന്നത്?
Company and government.
Yes, review the correspondence between the Cooper company and the regulatory authority in order to confirm whether announcement in relation to the prohibition of the chemical have been already done. Then what you can recalculate in this case? You can recalculate the impairment, but impairment is not specified there. So in that case,
feasibility study.
Yeah, you can recalculate the amount spent on feasibility study in order to confirm whether the amount is mathematically accurate, right? So you can use the same point in relation to both the feasibility study as well as in relation to the company's impairment. So this is what you need to do in case if you're getting a question on matters to be considered and further procedures. Clear now?
Sir, if further procedures nipam 6 marks anangi 3 marks matte impairment review kum matte idu feasibility study angane namukku divide ചെയ്ത് എഴുതണം
divide ചെയ്ത് എഴുതിയാൽ മതി. Okay. Yeah. However, see, in this requirement, we have got an entirely different question. Okay. In this requirement, we have got an entirely different question. So what they have asked here?
Audit evidence.
Audit evidence. See, in October 2013, Cooper Company's comment on the matters to be considered and explain the audit evidence you should expect to find during the review of audit working papers in respect of each of the issues described above. So they have asked us to comment on the matters, which we have already done. Then explain the audit evidence you should find during your review of working papers in respect of each of the issues described. So instead of asking for the audit procedures, they have asked us for audit evidences. Literally, which means that you have to take an assumption that someone have already done the audit relating to the impairment as well as in relation to intangible asset. And now you are going for the review of his work. And when you open the particular company's working paper in relation to impairment and intangible asset, what you can find as the audit evidence, which is already being collected by the prior auditor. So if consider that Alan have already done the work of that particular company's impairment, and this is the Alan's working paper. So we have reviewed the working paper, and by reviewing the company's working paper, what we can find over here. So whatever things that are included within the working papers should be clearly specified. So it is nothing but what we need to do. You need to write the same audit procedures itself. Instead, one thing, normally when you write the audit procedures, you will be writing about what you're planning to do. Here, what is already done. So it is not literally required to mention about the procedure. You only want to mention about the document and information here. So it is not necessary to include procedure here. Instead, when you get a question on the audit evidence, you only want to include document or information as well as the purpose for which that particular document or information is obtained. Clear? Okay. So normally you used to mention that discuss with the management about the impairment review. Instead of that, you can include a point on notes of discussion with the management about the impairment review. Instead of writing obtaining written representation, you can find a written representation. Instead of obtaining external confirmation, you can mention that an external confirmation from someone is there. Then instead of reviewing correspondence, you can mention that a review of correspondence. Instead of recalculation, you can include that recalculation schedule. Recalculation schedule of the expense spent on feasibility study in order to confirm the mathematical accuracy. Instead of writing perform analytical procedure, an analytical procedure of dash. Instead of writing obtaining a breakdown of expenses, you can include that a breakdown of operating expenses in order to confirm that expense in relation to the feasibility study has been included in SOPL. Review of board minutes. Instead of that, a review of the board minutes. Agree dash expenses to supporting documents. Instead of that, you can mention that an agreement of dash expenses. Instead of writing review the notes, you can mention that a review of the notes to financial statements. This is how you need to provide the evidences. So you can use the same thing which we studied along with the audit procedures, but the only difference is that instead of including procedure, you need to write it in a past tense that someone have already done the work and you are about to review that. So whatever things that you can find in the company's working paper should be mentioned there. So just include whatever be the document or information collected plus the purpose for which it is obtained. So this is what you need to provide as part of matters to be considered as audit evidence. Clear, everyone?
Yes, sir.
Okay.
Yes, sir.
Yeah. So we have already discussed on matters to be considered further action, matters to be considered discussion with the management, matters to be considered further procedure, and finally matters to be considered an audit evidence. And when you include the matters to be considered part, keep one thing in mind, that you should never get confused between further action and further procedure. Further action is that lengthy procedure where you will be communicating to management, those charged with governance. Thereafter, you will be discussing with them about the impact of the report. And finally, you will also be obtaining written representation from them. But when it comes to the further procedure, it is just nothing but audit procedures that have to be performed by the auditor. So that creates a significant difference between matters to be considered for further action and further procedure. So always keep that one in mind. Okay, clear, everyone?
Yes, sir.
Yeah, good. Then one of the other one. See, normally there is always a possibility that you might be getting a question to consider matters to be considered before accepting an engagement. It can be any engagement, maybe PFI engagement. It can be an engagement like audit engagement itself. It can be an engagement relating to a company's forensic audit, anything. So before accepting a client company's engagement, you need to consider several matters. Only after considering these matters, you should consider getting appointed as the client company's auditor. Or maybe if you're getting appointed as a practitioner, that case as well. So before getting accepted as an auditor, you need to consider whether you have got sufficient resources. But keep in mind, you should never use these points as a by heart theory. Instead, you should use this point only if something is mentioned regarding the same thing in the scenario. If it is mentioned in the scenario that the auditor need to complete the audit in next 2 months, then the auditor has to literally consider whether he has got sufficient resources in relation to that. It may be mentioned in the scenario that auditor have got multiple other engagement already committed with other clients. So in that case, there can be chances that he might not be having sufficient resources. So he should consider using resources, and if only available resources are there, then only he should accept their engagement. Then there may be multiple things specified in relation to the client's risk. Maybe the prior audits report might be modified. There can be chances that the client might be having multiple subsidiary companies, like more than 30 subsidiaries. It may be mentioned that the client will be having operations in different segments. It may be specified that the client might be operating in a very regulated market. In all those situations, risk of the engagement will be mentioned to be high. In that case, you can specify that auditor must consider the risk of the engagement, and the auditor should accept the engagement only if they can accept that risk. Then, if anything is related to the fees is mentioned, you can also mention the same matter there. So the fees, auditor should always considering the fee of the engagement. Auditor should never accept an engagement if the fees is said to be on a percentage or contingent basis, or fees is provided to him on the basis of his performance. The fees should always be a fixed amount, and fees can also be based on the hours spent by the auditor. So it should not be in any other manner other than on the basis of time spent by the auditor and a fixed amount. Then professional competence. Consider that it may be mentioned in the scenario that the client company is operating in a specific industry, and industry specific knowledge might be required for the purpose of performing that engagement. So in that case, you can consider writing about the professional competence of the auditor. Then again, if there is something mentioned in the scenario that shows that the client company's reputation is affected, then you can mention that the auditor should consider the reputation of the client company, because if the reputation of the client company is very poor, automatically it will also affect the reputation of the audit firm. So therefore, the auditor should consider reputation of the client before accepting their work. Then the auditor should also convey about the preconditions for the audit and professional clearance. Well, we have already studied about the preconditions, whereby the auditor need to consider whether the client is using appropriate applicable financial reporting framework, whether the client company will provide us with access to all information, additional information, and unrestricted access to the persons within their entity. And we should also consider whether client can maintain adequate internal control for maintaining accuracy over the company's financial records. So if these are there, then only we should consider accepting the engagement. And when it comes to professional clearance, auditor should consider whether he will be able to communicate with the prior year auditor. And if the prior year auditor's communication permission is provided by the client, then only the auditor should accept the engagement. But always make sure that these 2 points should be specified only if it is an audit engagement. In case of a PFI engagement, it is not required to check the preconditions as well as professional clearance. You should consider these 2 points only in terms of audit engagement. Then, if something is mentioned in the scenario that might affect the auditor's independence or objectivity, as how we learned in the ethics area, if there is something specified in the scenario which would directly affect the auditor's integrity, or in any manner it may affect the objectivity of the auditor, which creates threats to self-interest, self-review, advocacy, familiarity, or intimidation or management threat, then independence and objectivity related points can be considered. But when you write the points in relation to independence and objectivity, ensure that you are writing the clear safeguards as well. And if there is something mentioned in the scenario that might affect the management's integrity, you should consider that. And you can also consider writing the points in relation to performing customer due diligence, that you should always consider the possibility of client performing money laundering activities. And if there is any mere chance that the client might perform money laundering related activities, auditor should not accept their engagement as part of the due diligence procedure. So these are the factors that need to be considered by the auditor before accepting a client company's engagement. Clear, everyone? Okay.
Yes, sir.
And in addition to that, one of the most important factors that you need to consider while performing matters to be considered before accepting the engagement is relating to the PFI engagement, whereby we have literally studied that before accepting a PFI engagement, it is mandatory for an auditor to check these factors. So what all are the specific matters that should be considered by the auditor before accepting a PFI engagement? The auditor should consider about the intended use of the information. Then he need to consider whether it is for general or limited distribution. They need to consider the nature of assumptions. We need to consider the elements included in the report as well as period covered. These are the factors need to be mandatorily be considered. Because if the intended use of information is for external users, automatically the risk that the auditor might be facing will be high. If it is for a general distribution, again, the risk of the engagement will be very high. Nature of assumption should be based on forecast rather than projection. If the assumptions on the basis of which PFI is calculated is purely projections, then the PFI will not be realistic. Therefore, the auditor should not accept that engagement. We need to consider about the elements included, like whether it is just the statement of P&L or it includes a forecast statement of cash flows as well as a forecast statement of financial position. We must consider that. Finally, we must also consider the period covered by the information. If the period covered by the information is high, like if the period covered for the information is more than 5 to 10 years, automatically, it might not be reliable. So we have to consider these factors. But I have already told you one thing, that if you're getting a question on PFI engagement and matters to be considered before accepting that PFI engagements cover report, you can directly use these points because it's clearly specified in ISAE, International Standards on Assurance Engagement 3400, that it is mandatory for an auditor to consider these factors before accepting a PFI engagement. Clear, everyone?
Yes, sir.
Okay. So just a moment. See, this is a question called Dragon Group. In our latest revision kit, Kaplan revision kit, question number 55, Dragon, where we have got a question on considering using the specific information provided, evaluate the matters which should be considered before accepting the audit engagement in the event of firm being successful in the tender. So they have asked us to consider matters to be considered before accepting an audit engagement. So please do one thing, everyone. Please read this area and consider the matters that the auditor need to consider before accepting this specific engagement. Well, there are other number of factors to be considered over here. So for the time being, please go through this paragraph and consider the matters to be considered by the auditor before accepting this specific audit work. Done? Okay. The acquisitive strategy of the group over the last few years has led to significant growth. Group revenue has increased by 25% in the last 3 years and is predicted to increase by a further 35% in the next 4 years as the acquisition of more subsidiaries is planned. The Dragon Group has raised finance for acquisition in the past by becoming listed on stock exchange of 3 different countries. A new listing on foreign stock exchange is planned for Jan 2016. For this reason, management would like the group audit to be completed by 31st December 2015. And at the beginning of the question, it is mentioned that their year end is 30th September. Okay. So what are the factors that the auditor need to consider before accepting this work in relation to the same paragraph? What are the factors? Everyone, what are the factors need to be considered by the auditor? Specific to the scenario, okay? Not relating to the general one, specific to the scenario. So, well, the first thing, they have clearly specified that they have already been listed in multiple stock markets. In addition to which, they are planning to list in additional 3 more different countries' stock exchanges. So, as an auditor, before accepting this work, definitely we need to consider whether, as an auditor, we have got knowledge about the listing requirements in the countries where the company is planning to list their company's financials. Sorry, company's stock, right? Because once the stock exchange listing is done, definitely for the current year audit as well as for the upcoming year's audit, we will be responsible for reviewing the company's financial statements and to check whether each of the stock exchange regulations are being followed by the client company. And if the auditor is not having sufficient knowledge in relation to this, they will not be able to perform the engagement appropriately. Therefore, before accepting the engagement, we need to consider whether the auditor is having knowledge with regarding this one. Clear?
Yes, sir.
Yes, sir.
Again, about what else? The risk of the engagement is high or low here?
Hi.
Hi.
Yeah, there is significant risk in the client company's engagement, right? Because already the company is listed in multiple stock exchange, especially they are planning to list in additional 3 more country stock. So definitely they need to attract the shareholders or the potential investors to the company. Therefore, there can be chances that they might intentionally be biased to overstate the company's financial prospects in order to attract the market. Therefore, the risk of the engagement will be very high. The possibility of having management bias is significantly high. Therefore, the auditor need to consider whether the auditor will be able to manage this risk, and the auditor should accept the engagement only if they really believe that they will be manage it appropriately. Clear, everyone?
Yes, sir.
Again, what else is there to be considered?
Business.
Anything else? Anything else?
Time frame consider.
Time frame have to be considered, right? Because the year end is 30th September, and they are requesting the auditor to perform the engagement by the end of, complete the engagement by end of 31st December. Literally, they are getting only
3 months.
literally they are getting only September, October, 3 months. So is there a sufficient period for a very huge entity like this? Actually, we have missed the first part. They have already mentioned that they've got 20 subsidiaries. Okay. They've got in total of 20 subsidiary. So we are responsible for auditing 20 subsidiary and the parent company. So will that be okay to confirm that you will be able to perform the whole engagement for these 21 client companies by the end of 3 months? പറ്റുമോ? Reasonable period ആണോ?
No.
21 കമ്പനിയുടെ നിങ്ങൾക്ക് ചെയ്യാനുള്ളത്? No. അപ്പോൾ നിങ്ങൾ എന്ത് പറയാ? The auditor should consider whether they will be able to perform engagement of all the 20 subsidiary and that of the parent company by the end of 3-month period. Because the auditor will be able to start with the parent company's audit only after completing the audit of subsidiary entities, because the subsidiary entities financials will be consolidated to the parent. So the impact over the parent company's financials have to be considered after auditing the subsidiary company's financials. So if the auditor believes that he have sufficient resources to complete the whole engagement by the time frame, then only the auditor should accept the engagement, or else the auditor should not accept the engagement if he is not having sufficient resources. So this is how you need to consider the matters before accepting an audit engagement. Clear, everyone?
Yes, sir.
Okay. So whenever you get a question to consider the matters to be considered before accepting engagement, you should never focus on the general factors. Instead, you have to focus on the things that are being mentioned in the scenario. Okay? Yeah. One more question. See, there's another question in the revision kit, which we have already done. It's a question called Waters. So in the Waters company's question, they have asked similar requirement. Using the information contained in Exhibit 1, evaluate the matters to be considered by Hunt Company before accepting the engagement to review and report on Waters Company's prospective financial information. So they have asked us to consider matters to be considered before accepting engagement to review and report on PFI. So what do we need to consider before accepting a PFI related engagement? What do we need to consider before accepting a PFI related engagement?
Intended users.
Yes, the same thing which we learned in ISA 3400, that the intended use of information have to be considered. Then we need to consider whether it is for general or limited distribution. We need to consider the nature of assumptions, elements to be included in the information, and the period covered by the information. Clear? Okay. So anyway, these factors can be included there, but always keep in mind, you should not provide a list of this item. Instead, you need to explain each one of these. Okay. Just give a brief heading and just give 2 or 3 sentences as explanation for each one of them on the basis of the scenario. So rather than that, you should not list it down, because you want to get sufficient mark for listing the factors to be considered before accepting the engagement. Clear? And you should not also complete the answer by just providing the standard requirements. But in addition to that, you should also write scenario specific points also. At least 2 scenario specific points have to be provided. Definitely there will be points in the scenario relating to the same case. Okay. Clear, everyone?
Yes, sir.
So there's another question called Hawk. Okay. So it's not there in the latest kit. It's a question out there in the old revision kit. So please read this first requirement. Done? So what they have actually asked us. So they have asked us to identify and explain the matters that should be considered in agreeing the terms of the engagement. They have asked us to consider, identify and explain the matters that should be considered in agreeing the terms of the engagement, which is a bit different from that of the old engagement. I mean, old question. Well, this new question is also based on a PFI engagement. So in this question, they have asked us to identify the matters that the auditor should consider before accepting the engagement. And in this case, it's identify the matters auditor should consider in agreeing the terms of the engagement. Well, before accepting the engagement and before agreeing terms of engagement is entirely different. So when you are planning to agree to the terms of an engagement, what you will be considering? Definitely the terms. So where will be having the terms for an engagement? We'll be having it within the engagement letter. So before agreeing to the terms of engagement, we need to consider the matters which is listed out there in the engagement letter, which means we need to consider objectives and scope of the audit, auditor's responsibilities, management's responsibility. We need to consider about the applicable financial reporting framework, then reference to expected form and content of the report. If something is specified in relation to the fees have to be provided there. If something relating to deadline is specified in the engagement, that have to be considered. So these are the factors you need to consider before agreeing the terms of an engagement. Before agreeing the terms of an engagement, endaka factors are considered in the engagement letter factors. Again, one more thing. As I mentioned earlier, the one we got as a requirement here is relating to a PFI engagement. So if you get a question on the matters to be considered before accepting a PFI engagement, always ensure that you are including engagement letter content plus the one you learned in relation to PFI. Because normally when it comes to a PFI engagement letter, it will be having both the elements that is mentioned in ISA 3400 plus the basic elements of an engagement letter. So both of this have to be provided if it is asked for matters to be considered before before agreeing the terms of an engagement. Clear, Ayo?
Yes, sir.
Okay. So this is what you need to keep in mind. Okay. So it's very important. Please do practice that question relating to HOC for matters to be considered before agreeing the terms of an engagement. Voters for considering matters to be considered before accepting an engagement. Okay. All right. And you can also consider doing the question relating to the Dragon Group, the one we discussed earlier in relation to that stock market listing and all. So in this session, we have discussed on a very wide area. We have discussed almost major part of the reporting area. Plus, we have also discussed about the matters to be considered part. And with regarding the area of reporting, we have discussed on matters to be considered and further actions that need to be performed by the auditor, matters to be considered and further actions, matters to be considered in discussion with the management, matters to be considered in further procedure. And again, we have considered about matters to be considered before accepting the engagement in relation to PFI and normal assurance engagement. And finally, matters to be considered before agreeing the terms of an audit engagement or before agreeing the terms of other assurance engagements. Is it clear, everyone, this much?
Yes, sir.
Okay. Okay. So this is what we need to discuss as part of today's session. So everyone, please do consider one thing that we have discussed a hell lot of area as part of our today's session. So please do go through the questions that we discussed today. Okay. Just go through the questions one by one, especially before starting with the next day session. Please do practice the questions in relation to the matters to be considered before accepting and before agreeing the terms of engagement. I have specified 3 questions: voters, dragon, HOC. Voters and dragon is there in the latest revision kit. HOC is there in the 2021 revision kit. That question is not available in the latest kit. So you can just practice with the old revision kit. So please do go through that revision kits. Okay. So have you got any specific doubt in relation to the topic that we discussed today? Any doubt?
No,
For
sir.
anyone? All clear? Paka? ആർക്കെങ്കിലും ഡൗട്ട് ഉണ്ടോ മക്കളെ? നമ്മൾ ഡിസ്കസ് ചെയ്ത് ഇത്രയും കാര്യത്തെ പറ്റിയിട്ട് ക്ലിയർ ആണോ പ്രോപ്പർലി? ഓക്കെ. സോ അപ്പൊ ഇത്ര ഏരിയ എല്ലാവരും ഇന്ന് തന്നെ ഒന്ന് പ്രാക്ടീസ് ചെയ്യണേ. നമ്മൾ ഓൾമോസ്റ്റ് 1 hour ആണ് ഡിസ്കസ് ചെയ്ത്, പക്ഷെ അതിൻ്റെ അകത്തുള്ള കോണ്ടന്റ് ഭയങ്കര വൈഡ് ആണ്. സോ ഇത്രയും കാര്യങ്ങൾ എല്ലാവരും പ്രോപ്പർലി ഡിസ്കസ് ചെയ്യണം ഇന്ന് തന്നെ. ആൻഡ് അതിനെ ബേസ് ചെയ്തുള്ള ക്വസ്റ്റ്യൻസും ചെയ്യണേ. ഓക്കെ. Okay, so please do go through the questions and do ask me in the next day session if you have got any doubt in relation to the one we discussed in today's session. Okay. All right. So that's it, guys. Thank you so much. Thank you.
Thank you, sir.
Thank you.